Hello, this is Liberty Mark 222. This video is a commentary I had about from Mike Maloney. He talked to Grant Williams, who's in Singapore, and this is about the gold market. And they're talking a little bit about the billion banks and what's kind of going on in the gold market right now, which I think is really significant. And what they're saying is, okay, the bullion banks, what they do is they get this gold. The bullion banks, they'll lease some gold, and so they'll sell the gold. They get it at quarter percent, and then they'll take hedges out, and then they'll sell it and make interest on it from 5 to 9%, something like that. Now, it worked pretty good when the interest rates were pretty high, but when the interest rates were low, we're having a little bit of problems here. And also, what they pointed out was really interesting, because it showed the correlation between demand and the price of gold. Now, the price on August 17th in 2011 said that Hugo Chavez, he demanded his 99 tons of gold from the New York. I guess it's from England, yeah. And the price of gold had spiked in up to $1,910 after that. Now, and also some other banks, they wanted their gold too. Now, so we kind of had a trading range there for a while, and then January 14th, 2013, the Bundesbank, the second largest owner of gold in the world, besides the United States, they wanted 350 tons of gold from the Paris and 300 tons from New York. And so what happened is really interesting. From that point in January 2013, the price of gold went way down. And what Mike Maloney and this Grant Williams were saying is that what they did was they didn't have the gold, so what they did was they forced down the price of gold. What they did was it got to a certain point, and it broke the support level, and it caused a bunch of stop orders to be broken. And then once that happened, then it caused a cascading effect, and the investors started selling off. And then people were saying, "Oh, it's bearish, that the price is going down," so other people sold. So their whole idea was to free up gold so they could buy it cheap, I guess, to give it to the Bundesbank. But what happened, which they didn't really count on, maybe, I don't know what the deal was that with the decreased price, the demand just went through the roof in Asia, especially in China and India and Vietnam, all Asia. And so they've been just buying it like crazy. I've heard this Jim Willie, he said that they've got 15,000 tons of gold now, China, and that Russia has like 20,000 tons of gold. So it's just a tremendous amount of gold that the eastern countries have right now. So anyway, what's happened is that there's been a squeeze for supply of physical gold, and it's caused the GOFO rate, that's the gold forwarding rate, to drop below zero, become negative. So these banks are trying to acquire gold so they can fill their orders. They've got a short squeeze right now. And what Mike Maloney and this Grant what's his name, Grant Williams, were saying was that by the end of the year we're going to have some really a vicious bounce, and that this is probably the bottom here. So I think it's very significant what they were saying, and this is Liberty Mark 222. Thanks, bye.